Is this the beginning of the end for Tesla?
Keith Fitzgerald of Fitzgerald Group says Tesla is a buy, right now?
The EV market is finally getting a shakeup. The end of free government money in the form of federal EV tax credits is coming to an end, and I'm going to explain what implications this will have. Welcome back to the channel. I'm John, a CPA, and I talk about finance, taxes, and economic news. First, I'm going to explain the EV tax credit. We're going to drill down and look at how this could affect Tesla's sales and what this means for the EV market as a whole. The secondhand market for vehicles like Tesla's has taken a beating, but what will happen when the EV tax credit is gone? Once I explain the story of the tax credit and how Tesla has been doing, I'm going to explain the stock price. We have Q3 delivery numbers coming up this week or next, and it's an exciting time to be watching the EV industry with the tax credit expiring. Now let's dive into it. Anyone who has looked at an EV has probably heard of the $7,500 EV tax credit. It was signed into law in August of 2022 as part of the Inflation Reduction Act and has now been around roughly 3 years. It's important to mention what a tax credit is. In simple terms, a tax credit directly reduces the taxes that you owe dollar for dollar. For example, a $2,000 tax credit will cut your tax bill by $2,000. This is more beneficial than a tax deduction, which is subtracted from your income when you file. Generally, deductions end up being less than a credit. Tax credits can be refundable or non-refundable. Refundable means that you can even get a refund when your tax bill is below zero. Non-refundable credits like the EV credit can only reduce your liability to zero. Enjoying this video so far? A like would go a long way, but subscribe if you want to support the channel and see more. There's a baked-in cooker with the EV tax credit. Vehicles that were placed into service after December 31, 2023. You could choose to transfer the credit to a registered dealer for an immediate discount on the vehicle. For a lot of people after 2023, they took this route for immediate benefits of reducing their purchase price. The federal EV tax credit even incentivized leasing, allowing lessors, dealers, or manufacturers to claim the credit. All the good times, though, are coming to an end on October 1st. Wording in the Big Beautiful Bill is killing the $7,500 credit. The only way to extend the discount per se is having a written purchase agreement for a vehicle by September 30, but the vehicle doesn't need to be delivered then. Tesla put a countdown timer on their website to incite orders by September 30th. I'm sure people in the organization had the hair on the back of their neck standing up with the expiry of this tax credit. They're losing a major selling point. At the end of the day, it was giving most EV automakers a distinct advantage over their gasoline competitors. There were a few important points, though, when it came to the EV tax credit, and if you didn't read the fine print, you simply weren't going to be eligible. EVs need to be assembled in North America, and components couldn't come from countries such as Russia, China, and North Korea. The government has a full list of EVs and plug-in hybrids that qualified for the credit at fueleconomy.gov. That wasn't all though. There were price restrictions to qualify for the credit. Sedans and coupes had a max price of $55,000, while trucks and SUVs were higher at $80,000. On top of that, income limits disqualified people from the credit. You were limited to $300,000 in adjusted gross income for couples or $150,000 as an individual to qualify. Even though the big federal credit is going away, it's not the end for EV discounts. States continue to incentivize the EV market, with states like California offering up to $7,000 in rebates for certain buyers, and New York is on board with a program of their own offering up to $2,000. I really like to think there are two types of buyers when it comes to EVs. One who solely wants an EV regardless of the tax credits, and one who is solely buying for the price incentives. There's no denying that a lot of people have solely been buying due to the attractive benefits of the tax credits. Even Elon himself has implied that buying will take a hit once the federal credit is gone. We could potentially start to see this play out in the data of Q4 2025 and Q1 2026 sales. As for Q3, it's been said that sales in China have been progressing well for Tesla, and some analysts are expecting a beat on the expected delivery numbers. It's always been Tesla's goal to produce cheaper EVs, and they need to now more than ever to compete with the gas market. Sure, it's an entirely different product and market segment, but there will be a group of people who won't pay more for a Tesla when they can get a Honda for roughly the same price or cheaper. It's just hard to get these people to convert over. And it's no secret that Tesla has had its share of recalls. You can often find a group online praising the reliability of Tesla and close to no maintenance. That said, Tesla owners aren't shy to complain about misaligned panels, interiors that fall apart quickly, and the latest, it was the malfunction with the door handles. As good as the Cybertruck was touted to be, many Tesla fans called that a fail too. Plenty of them came off the line with issues, and they had to be remediated in the following months. Nearly all 46,000 Cybertrucks on the road were recalled for a trim panel that could detach. On top of that, it was known the accelerator pedal would not dislodge. If you own a Tesla, let me know in the comments if you had a great experience or not. Personally, I've had a Tesla Model 3 for a rental, and while it was a short period of time, I only had high remarks for the car, aside from the frequent charging when trying to go on long distance trips. Again, with the credit expiring, I'm sure that's something people are going to think about when considering gas versus EV and buying a vehicle. While I've been on about Tesla and it's the poster child for the EV market, other automakers are in the same boat when the credit expires. They're losing a key source of income with the federal tax credit expiring. What's arguably worse than the federal tax credit going away, it's the price of used Teslas. Unfortunately, when Musk was in the government, widespread vandalism of Teslas drove Tesla owners to flood the trade-in lots. Over the span of a few months, some Tesla owners were doing anything they could to change their vehicle brands. This left dealers having an unprecedented number of used Teslas, which in turn drove down the price of Teslas. Some people not turned off by the vandalism could see it as the prime opportunity to buy a used Tesla. We can't ignore the elephant in the room. Many Tesla bears are screaming the stock price is overvalued. I'd say their argument could be strengthened by Tesla's declining car sales and the cut of the federal tax credit, which hasn't even hit the brand yet. On the other hand, there's a lot more to Tesla's brand, and Musk is saying their robots are going to be a market leader in just a few years' time. To be honest though, Tesla is a meme stock.
Calling a stock a meme stock is almost like an insult.
The PE ratio is sitting at 265. That means investors are willing to pay 265 times the earnings per share for each share of stock. Still, it's nowhere near its peak PE ratio back in December of 2020, where it was around 1,274. I doubt we ever see those levels again. That in mind, a P ratio of 265 means investors are pricing in incredible upward trajectory due to the promise of Tesla's robots. Time will only tell if Tesla reverts back to $300 from today's prices or marches on up to $600. Elon is back at the helm. How is he going to respond to the federal tax credit being cut? It's going to be something to watch. Can he get prices down even farther using robots in the future years? Will the robots become the leading product of Tesla? It seems like that's the promise, at least. It's not just Tesla that the federal tax credit's going to affect being cut, but all EV makers that were making vehicles eligible for the credit. The next few years will be interesting to see how EV sales get reported. For now, I'm sticking to gas, but let me know in the comments below your thoughts on the credit going away, the future of EVs, and even Tesla's share price. I'll see you in another finance video soon.